doom.
Come on, boy. Let's play.
Yeah, let's play. We're gonna have a lot of fun.
Well, I saw Lon Chaney walking with the Queen, doing the werewolves of London. I saw Lon Chaney Jr. walking with the Queen, doing the werewolves of London. I saw a werewolf drinking a pina colada and Trader Vic's. His hair was perfect.
Have you ever seen that movie, Lee? Did you ever see Color of Money?
Haven't seen it. Heard a lot about it. It's a classic, like Cocktail, isn't it? Like it's one of those things that
Why do you say that like you know it's a classic? You only know that because I told you it's a classic.
Mate, I was around those days. I was a fetus, but I was around.
This channel's audience, as the audience already knows, is largely Gen X. So people 10 years younger than me, 10 years older than me, because I'm the end of Gen X. What generation are you? How old are you?
I'm a millennial, so I'm not quite Gen Z and I'm not quite millennial. I'm in that like bridge between. I represent the golden few of us that are
How
born.
old? Yeah, but how old are you? 26?
26. So 1997 is when I was born. So it's like right on the cusp.
Wow. So, you know, there's a conspiracy theory in the chats and people were talking about it in the Discord. We should probably make a video at some point here for TA, but people were saying in the Discord that you're my son because people know I'm half Welsh, half German, half Irish. I'm three halves. And but I said that's impossible. Yeah, no, I said that's impossible. I haven't been to Wales in 27 years. So the math doesn't add up, right? Because you're 26.
Yeah.
So it's impossible. But also, I could easily prove that you're not my son.
Why is that, mate?
Because if I had a son, he would be attractive.
Yeah, that's funny. Funny guy. Yeah, if I had a dad, to be fair, he would have hair as well. So there's that.
I had hair at one point.
Once upon a time. Was that in 1997 when I was born?
What's going on, guys? Happy Thursday, everybody. We have a lot to cover in today's video. Take a moment, a brief second, smash the like button for me. Hit the subscribe button if you enjoy this content. And if you guys want to trade these markets, check out our two fantastic sponsors, SimpleFX, where you can trade everything. You can trade Bitcoin, global equities, commodities, and with our link and only with our link, get up to a $5,000 first-time deposit bonus available instantly to trade with. That link, I'll pin it in the YouTube comments. It's also in the video description. And if you want to stay on a crypto exchange and trade all the myriad of altcoins as well, then check out BingX. I'll put that in the YouTube comments and video description as well. Message Lee on the Telegram with any questions. Both of them will give you a free month in our room if you want to try out one of their services. Guys, real quick, just a reminder, this is my video vlog. Everything I say is for entertainment and education purposes only. Always do your own due diligence if you intend to trade these markets. Let's talk about a few things here in the marketplace. I was just talking about with my son. No, he's not my son. But let's talk about what's happened. So yesterday was an 89-day pivot on Fibonacci on the S&P. And what a reversal that was for that day. The price dropped, what, $30, $40 off of that high? Very interesting to see that. But guys, I put the Dow here on my screen as well because we talk about Wyckoff concepts all the time, and we're going to cover the major indices here, individual equities, and of course, Bitcoin. I'll show you where I think Bitcoin's getting support. But look at the Dow, right? This is the baby S&P. And when you're looking at this, the first thing my eyes are always drawn to is just trading ranges vis-a-vis Wyckoff, right? And look at the 1618, how you got above it. You're building your pivot up here on the 1618. So if we were just going to put this here, throw that trend line there so you can visualize this would be your pivot and your base would be down here, over here, doesn't matter. It's a trading range, okay? So you're looking at this and you can see the pivots being built up here. So when I'm looking at this, if we can hold 37,799, I want to see if we're going to try to pivot more to the upside. And when I look at the MFI, it came down and now it's putting in that higher low structure, giving you this forming potentially a W pattern. Remember, next week is big tech earnings. Okay. Next week's big tech earnings. And the Dow has been acting very similar to Bitcoin in the sense that it's been leading the S&P. Notice we are above the 1618 from the same correction retracement, the July high right here to the October low, whereas the S&P is still below it. Remember, that 1618 is 49.22. Now, as you can tell from the intro and from the thumbnail, also the wolf moon. So we're going to go over that, the lunar cycles and what they actually mean and how you can use them as confluence. But this is what I'm looking at on the Dow, guys. So this can have more upside. The way I'm viewing the markets, the way I personally am viewing the markets is the S&P is the mother of all the markets. So when I'm looking at individual assets to trade, I want to see if the S&P is going to get to its harmonic target, that 49.22 harmonic expansion, and put in that top. And it got close yesterday. I got the 49.08. Okay. So it got really close. And so I want to see that. And when you're looking at the structures of leading indices like the Dow, this is just 30 stocks, but it's representative of every sector of the S&P. It's holding key support here. Now, could it fail? Of course it could. It could easily fail, right? We have more data coming out tomorrow. We have the Fed meeting at the end of the month in January, and we have big tech earnings next week. So you're always looking at this. Remember, time is more important than price. And this is a key point. 1618 would have provided really nice little trades here. Actually, I traded one of these little moves on our Discord, but provided nice little trades, but you still pumped above it. And so now you're waiting to see if you're going to get this pivot that comes up, takes out the fractal, and you move up. And we're going to see that with the S&P as well, okay? Let's jump over to the S&P. So again, our target, guys, we have the S&P. If we looked at this from that July high to the October low, 1618, 49.22. Want to see if we start building a top right here in this range. Let me throw the moon cycles on here as well, the lunar cycles. Let's put this on the daily. Lots of people, I saw some comments, people laughing about this and stuff. That's fine. I really don't care. But what you guys need to understand is natural law. The reason that old school traders like W.D. Gann looked at lunar cycles, looked at solar cycles, looked at time cycles, because all the way back to Charles Dow, they realized the market adhered to natural law. So do I trade something based exclusively on a lunar cycle? No, I do not. But you would be really remiss in the charts if you don't pay attention. New moon, top, okay? Full moon, top. New moon, start to build a top. Full moon, top, big sell-off. Does every moon mean something? No, they do not. But you see these in trend. Full moon top, new moon top, massive sell-off, right? Same thing here. New moon top, massive sell-off. And of course, our eclipse, guys, the lunar eclipse that we had right here was the exact candle for the 9-week rally up. It happened on the lunar eclipse. And you can see the last full moon here gave you right on that 43-day pivot, a sell-off. Another top, a sell-off. And this indicator is on TradingView. It's just called moon phases. This indicator is going to have the full moon start to form here. So I'm looking for potentially another top here, as well as confluence with what we know happens in February. Okay, going back the last 2 years, including the Y2K cycle, we have this sell-off in February of an average of 10%. And in this cycle, all of these wave moves, 20% up, 10% down, 20% up, 10% down, 20% up. I'm looking for a 10% down correction through the month of February. And I'm thinking that's going to come down to our 618. Covered this in detail on Monday's video, right? So I don't want to rehash it. Watch Monday's video if you want to see this in more detail. Then if we hold that support at the 618, which is the most commonly retraced to fib in the S&P over a 30-year study, okay, 618, 4416, let's call it 4400. Then looking for that March, April, spike the ball, Y2K, blow off top, 5234 when you adjust this for the fibs, but I call it 5200. Looking for that move back to 5200, and that should be the blow off top. The reality of the recession will be setting in, and that's when I believe the market will peak. And I saw a couple comments still from people saying, man, this guy's been bearish for a couple of years. Again, to watch this channel, Maybe not to watch a lot of other channels, especially channels that have 250K Bitcoin for 3 years, 180K Bitcoin now. Those channels, you only have to hold one idea in your head at a time. To watch my channel, you have to be able to hold two ideas in your head at the same time. You have to be able to look at trades like our long on Bitcoin that went 50% from October. You have to be able to look at trades, trade up and down, but understand the economic cycle, because in the end, the markets will adhere to the economic cycle, and we are in the average time frame of the 3-month, 10-year yield curve inversion to begin to play out, which, as you guys know from last video, I believe will be playing out spring equinox into early April. We'll have that market peak and then our big drawdown, average drawdown of 33% in any type of recession, looking for that 3,400 level to be hit, take out our low. A couple people are asking in the comments, could we still go down to the bubble targets? Yeah, absolutely. Something could break in the market. An unforeseen event like a black swan could occur and you can get your bubble targets. Maybe the Fed doesn't bail the markets out. This is an election year. You have to remember, we went over this as well, but 2000 was an election year. The Fed tried to bail the market out when it was dumping, didn't stop the NASDAQ from falling 84% or the S&P from falling 50%. 2008 was an election year. They tried to bail the market out. S&P fell 57%, okay? So that's the realistic target, is taking out the low, because again, the market has never put in a low prior to a recession, not once in US history. So let's go back and look at some TA real quick. Get rid of this moon stuff, this voodoo. I want to look at a couple of things here. Let's look at the volatility on the S&P. And you can see this represented here in our market makers, Caterpillar or Gummy Worm. You're on top of the band here, which is essentially a Bollinger Band, but you're on top of the band here. So, when you're outside of the band like this, eventually the market always trades back to its mean at some level. So we have FOMO, we have euphoria right now. Price is 48.92, but you can see you're expanding here. So you can still go up a little bit more before you start to pull back. But I want to show you this because, again, I just showed you the Dow, but when you look at this on the Dow, let's check this out real quick. I forgot to show this to you. When you look at this on the Dow, look at the difference. Look how much tighter it is, okay? And this is what I was saying. The Dow's been leading the S&P. It pumped up above its 1618 first, which is the target we're waiting for the S&P to get to, much the same way the NASDAQ's been outperforming. So if this comes up, right, if we get good earnings or more FOMO in the market, you could see this expand, open up again, and look and see where the Dow moves to, okay, if it does that. But this is why you need to track other things as well as what you plan on trading. And if we look at this from our perspective of, let's go ahead and throw a trend-based fib on here, because we hit this 4907 target really, really clearly. Let's go ahead and throw this on a 3-day chart. Need to see more candles. If we look at this, guys, from our wave projection here, right, one of our 20% waves on a trend-based fib, that's your Thursday the 9th, March 2023, up to that peak, down to your October low. Look what the one fib is. This is called a reciprocal move, okay? 100% retracement, 4907. And people might wonder what I'm doing. That's simply a ABCD pattern, okay? So this is a reciprocal move here of this pattern. There's your B, here's your C, and this is your D. And that's exactly where price found resistance, right? 49.08. So it was within $1, and then it sold all the way back off to whatever, 48.60 yesterday. So you have to be aware of these Fibonacci ratios in the market. And let's go ahead and look at this. What I want to show you as well here on the 5-day chart, showed it to you yesterday, but you have, or last video, the 5-day is so overbought. It's the most overbought it's been in years, going back to 2017. The Dow, by the way, is the most overbought it's been on the 5-day chart, which is the weekly. It's the most overbought it's been since 2011. Okay, 2011. Just to give you an idea of the FOMO in the marketplace. So again, this is all going to point to a top coming in here. But let's go ahead and do a couple of things here. Let's put this back on the daily, because the daily, you still have some room. You can move up. Does this have to move up to overbought? No, but you can see you're kind of going flat here. The market's waiting, guys. There's a lot of data that still come out. There's the GDP came out, and then we have the PCE coming out, Fed meeting next week, big tech earnings next week. Like I said, wait on time. Time's more important than price. We know our key levels, where we're at here on the S&P. We look at that fib retracement and just throw that back on that correction high down to the low, and you can just kind of track this. But right now you had your W pattern that formed, you broke out of it, right? You're below your 1618. Both the NASDAQ, the Dow got above their 1618, but you still need to get the 4922. You're at 48.94. And in this range, if you can get up there, that 49.22, 49.50 psychological number, divide the market by 50s, right? 49.50, 5,000. That range up there, if we can get up there, I think you're going to be putting your top in there. So this will be interesting to watch, and just be patient, because that's what I'm doing. I'm being very patient, waiting for the zone, right? We could call this pattern the Casey Anthony, because if price gets up there, it's going to get murdered, right? So let's go ahead and look at this on the NASDAQ. NASDAQ, again, trying to recover some of the losses yesterday. You're at 17,627, hitting your one spot 902, which is 17,631. 17,815 is your next level. But again, I don't care what the NASDAQ's doing until the S&P is done moving. Once the S&P is done moving, then I'm going to track the resistances on the NASDAQ. This is just for you guys to see some levels that I'm tracking here. 17,815 would be your next level up if you can get above 17,631, because the NASDAQ has clearly outperformed. Your 1618 is down here, 17,098. See, same W pattern. You got the same W pattern, but you spiked up higher. We're waiting on the S&P. It's trailing the markets. If we look at Bitcoin, guys, we've been over this many times, so I'm not going to kill you with it again. 48,562. We talked about that target for weeks for a shorted that in our room. Obviously, we caught the pump up. Lots of people are asking me, well, how low can Bitcoin go? And I just want to share this with you to put this in perspective. And I'll talk about the Bitcoin movements here. Grabbing our fib retracement from that base there of the diamond. Need to throw some fibs on here, but you're at the shallowest fib retracement, right? Let me throw these on. If you look at this, you're holding the 382, 39,520. You're 39.7. You got a wick below, came back up. Remember, normal retracements, again, the most commonly retraced to fib in the S&P on a study of 30 years is a 618. That's down here at 33K. So this would still be normal and a normal asset to retrace to the 618, make a double bottom with a higher low, and then potentially bounce back up, okay? And you're holding a high level of support, in my opinion, at 39,520. So all of this is normal. And what I think's going to happen has not changed. I think what you're going to do, you have your first peak, your wave one. This is going to be your base. When the S&P peaks, okay, when the S&P peaks and potentially start, Bitcoin's going to come back up. Okay. This serves two purposes. A, it completes a potential three-wave pattern, like a double top pattern here. Okay. It completes a three-wave pattern, whether it's a lower high or a higher high, but it completes that. But it also serves to fool all the teenage crypto YouTubers, the people on YouTube that have no idea about economic cycles. And they will say things like this to you. Crypto's decoupled. Bitcoin's decoupled from the economy, from the markets. Well, guys, it's one thing to say something. It's another thing to understand something, okay? When you look at the markets in the period of 2021, 2022, 2023, there were times where Bitcoin was moving at a spot 92 correlation for the majority of the time. Spot 92, a one-to-one correlation is a perfect correlation with the markets. The times that it decouples is like this move, okay? Bitcoin rallied first. Did it decouple? No, the markets rallied up right behind it, right? Just took longer. There's a lag. And then Bitcoin falls down to support. Markets keep pushing up. It's not decoupled. And the proof is in the pudding. Both markets spiked in 2021. Bitcoin and the Russell made their all-time high in November, 48 or 72 hours apart from each other, the same month that the NASDAQ made its all-time high. And then all the markets cratered in 2022, including Bitcoin, which fell 75%. So when you have an event where it pulls the market down, Bitcoin's coming with it, okay? If you want to look for tops in Bitcoin, look for where Michael Saylor's buying. I'm sure he's going to add to his Bitcoin up here here, or he did at 48K. Okay. So that's how you can look for tops. But as of right now, this is just nothing more than a 3-wave pattern. And I'm looking for a lower high or higher high to come in once the markets peak, and potentially when they start to pull down and form their 3 or 5-wave topping pattern. You're going to see Bitcoin do the same thing, and Bitcoin will pull down with the markets. And if the S&P comes down to 4,400, you're going to see these deeper retracement levels, guys. And a key level that you really have to watch here, that 33,672 after it makes this top, as well as below at 29.5, because this puts you back in that diamond pivot. Okay. So you can see that move. And, just to share with you as well, remember, if my S&P forecast comes true, if that S&P forecast comes true and you have the 786, well, now I got to put it back on here. Hold on a second. We got to show you this. So you have this, we got up to the 618, right? So think about this from a bullish perspective for a moment. We got up to the 618 at 48.5. If we get this retracement, if we form our top here, let's just say this ends up being a 3-wave top on a large time frame like this, you break down, okay? Let's say we come down to Bitcoin so volatile. Let's say we come down to 29.5, which will shake everybody out, right? 29.5. Where would this next move come up? That next move as the S&P pushes up to yet another new all-time high, 5,200, March, April. Well, you would look on your fib, 786 is 57K. Okay, 57K. So that's the bullish side of it. And we can look at that from this perspective as well. If we retrace down to the 786, you can see right here, if we come down to the 786 or come to the 618, you'll get different levels. Again, these are all just assumptions, right? We don't know exactly where price is going to go, but 57 or 57,555, the 1272 is at 54,285. So you have that 54 to 57K potentially for that next wave up March and April after Bitcoin corrects with the markets, which I believe it will. You got to remember how big the S&P is. One stock like Apple is bigger than the whole market cap of crypto, okay? So when the S&P drops from 49.22, 49.50 down to 4,400, it's trillions of dollars. Multiples of the market cap of crypto will be selling off. Okay, so I definitely think Bitcoin's coming down with it. And I would be looking at that deeper retracement level at 29.5. But for right now, you're just hovering on that 382, guys, 39,520. And I think we're going to get another wave back up and then a wave back down. That's going to break your double top, or we could put a 5-wave in here, topping pattern, but it's going to break down. And you're going to want to watch 33.6 and 29.5 when that happens. That's still a little bit of ways. Let's go ahead and jump over to the DAX. Lots of interest in the DAX on our Discord. We got a lot of Europeans on our Discord. And let's go ahead and do this. So the long-term resistance, as you guys know, come from this Wyckoff range, right? When I say comes from this Wyckoff range, I'm going to show it to you in case you're new to the channel. There's your Wyckoff ceiling. And look at this. This is perfect. Look at how it was tested for support twice, 14,597. Here's obviously your sell-off candle, okay? So you had your W pattern forming here, your breakout, and people that watch the channel already know what I'm going to say. This is an elongated on a 5-day chart Livermore pivot, okay? There's your back test to the dollar of the Wyckoff range. And then this is your move up, breaking this fractal high. The problem it's been stalling out all the way since, what date is that? December, okay? December 11th. So it's stalled out and it's consolidating sideways here. And you can see this represented in our fib pool. We've been talking about 16.9 forever. We go ahead and zoom in some on this. You guys can see this. But this is 16.9 on the weekly. This is a very bullish candle at the moment. Why? Because all the markets will track to the US markets, give or take, for the most part, specifically the European markets. China is a whole nother mess. Getting requests for a China video on the Hang Seng and Alibaba and a bunch of stuff there. So I might do that too if you guys are interested in it. 16,912 is where we're at now. So again, how am I trading the DAX? I'm trading the DAX based off the S&P. If the S&P continues to move up, I expect the DAX to move up. I'd be looking at 17,263 as a potential next level. You're at 16.9 right now. And the DAX, of course, it's its own creature. It could just start rolling over, but heavily influenced by what the other markets do. The Dow looks like it's trying to hold that higher level on top of Wyckoff. And if you look at this, again, from a Wyckoff perspective, a more near-term Wyckoff perspective, you're on top of your previous all-time high, doing the exact same thing the Dow is doing right now. You're trying to establish a pivot. This pivot could fail or the pivot could succeed. This is one of those times you got to understand what's happening in the marketplace. And if it succeeds, it's taking out that fractal and moving up. So when I see the S&P stall is when my shift, my gaze, my focus, like the eye of Sauron, will go from chart to chart to see what the resistance levels are on these other assets like the DAX, because historically, going back for over a month now, 16.9 has been a beautiful place to take a trade on the DAX, but this candle is very bullish. So I'm being patient here, guys. I'm being patient. 5-day chart on the DAX, again, it still has room to move up and momentum's good. Let's see what this looks like on the daily. Daily, you're just above the median line. Doesn't look bullish at all. And so you could have some divergence here, but this still looks bullish here, even on the daily. You're putting in a little bit of a doji. 16.9 is a real headache for the DAX. So we'll see. We'll see if this can break through. But on the larger time frame, the 5-day, definitely looks like a very strong candle, obviously. See what NVIDIA is doing. Same exact focus here. 613, 613 at the 200%. Look at the candles here on the daily time frame. Look at your MFI. You're overbought. You're putting in dojis. The 89-day Fibonacci pivot yesterday in the S&P, everything got up, sold back off, trying to come back up. So this could be your kill box up here in this range, okay? 639, 613. I say could be because NVIDIA doesn't report earnings all the way out until February. So it's going to track with tech and it's going to lead. Remember, NVIDIA, Meta, Microsoft, responsible for 81% of the gains in 2024. Market cap, guys, that's all it is. These prices are driven by market cap. Let's go ahead and look at Microsoft. Speaking of market cap, 406. I mean, Microsoft's still trying to push up, but you're seeing the candles are starting to go to stall speed. 409 is a 2618. Let's see if we form our kill box right in this zone, 403, 409. See what happens here the next couple of days. Let's look at our MFI really quick. This is a 5-hour. Let's check this out on a daily. Daily approaching overbought, but you can get overbought and still go up, okay? So just keep that in mind. These are just indicators. They're oscillators. All these things lag. You know what doesn't lag? Patterns. Patterns are predictive. When people tell you you can't predict the markets, they don't understand patterns. Patterns are the marriage of price and time. And that's used in confluence with Fibonacci. You can get realistic targets for trading. So let's look at AMD because I like this stock a lot to trade. Massive W pattern formed here. I'll just highlight this for you guys. Massive W pattern. This is a 3-day chart even. You can see it a lot easier zoomed out like this. Look at this W. Gives you this beautiful pattern here, 50% retracement on that move. And this looks like I have 195 at the 2618, 195, which also basically gives you a harmonic ratio here of the 1272, which is the square root of 1618. So I want to see if this thing can get to 195. You're at 184, and this thing's a rocket ship, okay? This reports on the 30th. I think the Fed's on the, 30th or 31st. So it reports towards the end of the month, but it's very FOMO induced. And just like with the ETFs, be aware, this could be this could be selling on the day of the report. Nobody's supposed to know what their earnings are going to be. All the numbers you see on TV, they're guesstimates, okay? Nobody actually knows. And this thing is zooming up. It has over a 1,000 PE. This is something I would like to trade in a correction, but it has to stop moving. Everything has to stop moving, and you'll see that when the S&P stalls, and that's at 195. I'm tracking that. Right now, price is 184. So keep your eyes on that one, guys. Gold, this is quick because it's not doing anything. 214, you're stuck between 2012 and 2067, going back and forth, back and forth. Not a lot going on here. Gold, 3-day chart, you're selling off, resetting the oscillator. If you can keep this higher low structure going, gold will move up if the markets move up at all. And then we're looking at gold topping out when the markets pull down and correct. You could see gold correct as well. Guys, hope you enjoyed this video. Hope all of you have a fantastic weekend. Leave me your comments. I answered a lot of them last video. I usually answer all of them. I've been very, very busy. But since I have the weekend ahead of me, I'll be sure to reply to everybody. All right, guys, take care. I will see you Monday.